Thank you, everyone, and welcome back to This Week in FinTech's podcast. I'm really excited for today's episode. I'm sitting here with Sandeep Pyapali, who is the CEO and founder of Mesta. For those of you who aren't familiar, you might be asking, what's Mesta? Mesta is building a global cross-border payment network that combines traditional payment rails with stablecoin blockchain payment systems. You know that I'm particularly excited and passionate about stablecoins because of our conference this year, StableCon, where we first got introduced to the Mesta team. They seem to be taking over the financial world. Every bank, every fintech, every crypto company is launching stablecoin products, but Mesta has been at this for a couple years. And so we wanted to sit down with Sandeep today and understand why.
The views expressed in this podcast are the speaker's own and are not the views of This Week in FinTech or any other person or entity. The content provided in this podcast is for informational purposes only and should not be construed as legal, business, tax, or investment advice or a recommendation, solicitation, endorsement, or offering by me or anyone else for the sale, subscription, or purchase of securities or for investment advisory services of any kind.
You might ask why businesses are choosing to work with Mesta. Well, there are a couple ways that they provide advantages over conventional payment providers. You can send USD and stablecoins in over 50 currencies to reach more markets immediately. You can cut your international payment costs by over 50% and eliminate the payment delays and uncertainty that you sometimes get with conventional payment systems. Where's my money? Has it not arrived yet? Why is it stuck in the process? The idea is that stablecoins will help alleviate a lot of these conventional pain points for merchants. So Sandeep, thanks so much for joining us today. Excited to dive in.
Thank you, Nick, for having me.
I'm curious, before we get into the product, to hear a little bit more about your background. I know we've chatted about this before, but you were previously heading up all payments at Uber. How long have you been in the payment space?
I've spent about 17 years building payment systems across the world. And right before Mesta, I was with Uber for almost 7 years, building what we call the Uber Payment Network. It's a network that moves upwards of $100 billion every year in 70 plus countries and does about 25 million transactions every single day on the underlying payment ledger. And right before Uber, I spent time with Bill.com from 2013 to 2015, building out the underlying payments platform powering all payments in the United States. And before that with PayPal. So significant years of experience in building payment systems across the world. And in the last 18 months, we've been working on building Mesta.
And so going back a little bit into your own career history, I'm curious, what got you started working at Uber on their payments product to begin with? And what kind of challenges did you encounter when you were working with Uber?
So I joined Uber in 2015 when the payments team was relatively small. Uber's focus then was primarily on the rides business, making sure that there are enough drivers and enough riders in several cities of the world. But in 2015, they began to understand the importance of making sure that payments are reliable. And that's when I joined the payments team. In the next 7 years, my focus of my work at Uber was to build out the Uber payment network that executes payments in 70 plus countries across the world. It was a challenging thing because collection of money at Uber primarily was through cards and later on through cash. But what was even more challenging is how do you pay drivers first and later on couriers, restaurants across the world in different forms of payment instrument. Some want it in a bank, some want it in a wallet. Even within bank, there's differences between normal bank accounts, IBANs, and so on. So how do we ensure that every single earner at Uber is paid reliably every single time across the world is something that I helped the team build out. And it was here at Uber while I was building these cross-border systems. Over and over again, I noticed the inefficiencies of this existing technologies and the frustration and the burning desire to build a faster, cheaper, and a more efficient global cross-border system was born in those years, which finally culminated to the team and I building out the Mesta payment network.
And so I noticed, after your time at Uber, you took some time off and went traveling to 10 different countries. When I see somebody who spent time traveling internationally, maybe it's the fintech nerd in me, I instinctively think about the difficulty in adjusting to different payment systems, converting to different currencies. I found that out personally many times when traveling internationally, that all of a sudden the payment methods that you're used to using may not be as ubiquitous as you really think they are. I'm curious to hear a little bit more about that trip and understand whether your time traveling internationally had any impact that led you to then go on and found Mesta.
Yeah, absolutely. Like you rightly said, traveling into 10 different countries with each of them having their own local payment systems is not very easy. People from developed countries, it is somewhat okay and easier because we happen to have cards in our wallets, and cards do tend to work in many countries. But especially in countries like India, in several places, international cards do not work. And I've experienced that, let's say, in India or even in Australia and New Zealand and some parts of Europe. And that's where the challenges come in for making sure that international travelers are able to use the local forms of payment method. And the only choice was to make sure that you either give cash, which in some cases is not even accepted in some of these countries, or adapt to the local forms of payment method. So cross-border payment still then remains a challenge. But what is more interesting is that local currencies are deeply entrenched into the local economies. And just because it does not work for international travelers doesn't mean local payment systems are not great. In fact, for citizens and residents living in each of these countries, these local currencies work excellently well for local commerce, whether it's offline or online. It is just that for a subset of the population that travels internationally, it does not. So it did influence in some way my focus to build Mesta, because Mesta is focused on the combination of fiat and stablecoins, not one or the other. There are a lot of companies out there who think that the future of all payments will be the sender and the receiver sending some kind of token to each other, whether you call the token a Bitcoin or a stablecoin. I do not believe that's true. Local currencies are still phenomenally great for local commerce, but it is the international leg of the transaction where they are not great for. And that's where stablecoins come in. And so it's the best of the worlds of fiat and the stablecoin world, which I believe is the future of payments in the short term or medium term.
Are there any payment systems that stood out to you from your time traveling that you thought worked particularly well? Most of our podcast listeners are by default in the US, where we've been pretty dependent on either credit cards or ACH rails for the majority of consumer payments for a while now. And while we're rolling out RTP and FedNow, which have more and more coverage every single year, I think, Americans still look at payment systems like UPI or Pix with a little bit of jealousy. Are there any payment systems that you encountered that you thought worked really well domestically?
I think you just mentioned UPI, in my opinion, is one of the most advanced payment system that is built out there. When you look at card payments, cards are just a layer on the underlying container, which is a bank account. But perennially, people store money in bank accounts. And then we had the introduction of wallets, which is another container to store, or digital wallets like PayPal and Venmo, which are digital containers to store money. And finally, now you have a new wallet called the blockchain wallet, where you can store stable coins. So different forms of money and different wallets. But ultimately, cards are just a layer on the top of all of this. The best way to move money is to move directly from one container to the other container. Let's say bank-to-bank transfers are excellent without having to go through the route of a card payment. And because it is so hard to do, to move money from one bank account to another bank account, as we have experienced in the United States, and now it's getting better with RTP and FedNow, India has sort of leapfrogged instead of sort of going through the route of cards to move money from bank account one to bank account two. They have built this system, which is the UPI, the underlying payment system being IMPS, the immediate payment system, which without the sender and the receiver having to give out personal bank account details, funds get transferred in real time at a fraction of a cost as compared to other countries. So that's the innovation in payments that India and we have seen in other countries such as Pix and Pay and SEPA Instant have put in place, and the United States is catching up. So I believe that the best payment system is to move directly from one container to another container without having to have a layer of cards in between, which is the most efficient way to do so.
So I'm curious to hear about your inspiration for Mesta explicitly. I know you started working on it in 2023, and I believe, if I'm correct, the product launched in 2024. How did you come to that vision and decide this is the time to start a company around this?
Right. So we started Mesta on Jan 1st, 2024. The entire of 2023 was spent in figuring out the idea, fine-tuning it, raising money from investors for the pre-seed round, creating the team. And we finally started building on Jan 1st, 2024. It's been close to 20 months building the product. We launched the product 10 months ago. It took us actually 10 months to actually build the product. And the focus was to make sure that archaic forms of payment, such as Swift wire or pre-funded liquidity pools of funds, are not used. And we can actually move funds from fiat to a stablecoin or stablecoin to a fiat, or ultimately fiat to fiat. The reason why Mesta was born in these years was that as I spent several years in the world of payments, it was very clear that they are built on the archaic forms of payment that I had mentioned, which is wires or pre-funded liquidity pools of funds. It was very clear that blockchain as a technology is out there to change payments. So the goal was to put together the payment world along with the blockchain world. And that's what I did in 2023, figuring out how do you mash these two worlds together. It was not enough that you had blockchain as a means of way to change payments. You needed the right token on the blockchain to change payments. If you think of blockchain as a bridge between from one form of payment to another form of payment, the bridge is great to have, but you still need a vehicle on the top of the bridge to go from one place to the other place. And the token or the vehicle was missing for a long time till stablecoins came along. I actually do not believe that Bitcoin is a great token to change cross-border payments or payments in general, because you need the underlying token to be stable in value. So you had the world of payments, you had blockchain, and finally the right token on the blockchain, which is stablecoins. And the last piece of the puzzle was the liquidity of these tokens has to be high enough in order to move money efficiently. And that has happened in the last 2 to 3 years with both USDC and USDT significantly high in liquidity. In 2023, we put this all together, matched the worlds of payments, the blockchain with the right token, and regulation across the world was beginning to take shape around stablecoins. So it was a great time to build Mesta. The trifecta of the blockchain, the regulation, and the liquidity of the stablecoins was high enough to go ahead and create the global Mesta payment network.
There's a lot of stablecoin hype this year, and stablecoins seem to be all the rage, but it feels like you understood this in building Mesta a couple of years before it became all the rage. I'm curious, with your perspective on international markets for stablecoins, which market do you think is the best in terms of really proactive stablecoin regulation? And which market would you like to see more of an openness to stablecoins in that's still difficult to work with?
Yeah, I think the market that provided clarity when at least 1.5 years ago was Europe with the VASP license in place. Mesta has a VASP license getting upgraded to MiCA. And it's great that we are having this podcast now, because a few weeks ago, the Genius Act was launched. There are markets such as Hong Kong and Singapore also having a fair bit of clear understanding on stablecoins. The one country that I was hoping to have that get there with clear regulation was United States, and we are finally there. It will still take the next 6 to 12 months for banks and non-banking financial institutions to clearly implement this regulation. So one of the markets that I was really hoping to see to lead the way was United States, and that has happened. What I expect to see, or what I want to see in the future, near future, is several states of the United States and several banks within the states to adopt this regulation. Regulation is one thing. Things magically did not change the day after the act was passed. We still have challenges around several of the banks in the United States not working with companies like Mesta who deal actively in stablecoins. And that is expected to change very soon. And that I'm hoping will happen so that more banks will be open to working with companies like Mesta. That's what the Genius Act did. And the second thing that will happen is we will see a lot of these banks introduce stablecoins by themselves. We've already seen NDFIs like PayPal and Ripple introduce their own stablecoins, but we'll see a lot more banks introducing their stablecoins. So I think from a regulation perspective, United States was a country that needed to make the move. It has made it. And in the near future, we should see more banks working with companies like Mesta and also introducing stablecoins, which will ignite the entire ecosystem of stablecoin payments.
And so thinking about Mesta specifically, you just launched your hybrid fiat stablecoin platform, and immediately it started scaling. I believe you processed $12 million in payment volumes in your first 12 weeks. You are obviously familiar with scaling payment systems. And ironically, when payment systems are really successful and they scale effectively, that's when you usually run into your most problems. Unlike a lot of other types of software or non-payments technology, it's possible to scale kind of indefinitely, but for payment systems, you always run into issues. What were the biggest challenges with that kind of early growth when you had just launched?
I think even before we launched, the challenge was to actually build out a payment system without using the archaic forms of payment such as wire and pre-funded liquidity pools of funds. It is not trivial. And within Mesta, we call this rewiring of payments currency after currency. What that means is in every single currency that Mesta deals in, the goal was to find the most efficient way to convert stablecoins into fiat and use local payment rails to send the fiat to the bank account of the beneficiary. And that is challenging to do it currency after currency. So we spent the first 10 months making sure that we have built reliable payment rails in every currency to ensure that in real time, we are able to convert stablecoins to fiat without having to use any of the archaic forms of payment methodologies. And that's not easy because you have to find the right set of partners to convert stablecoins to fiat, the right set of partners to access local payment rails, whether it's banks or fintechs, and bring all of this together on the underlying Mesta payment network. And therefore, because we are able to do this currency after currency, we are significantly cheaper and significantly faster than several traditional payment methods and other stablecoin payment companies, because we're able to build these payment rails natively by using the best of the players and partners and banks in each of the local markets. So we launched the payment system 10 months after we started building Mesta. It took us the time. And in the last 10 months, we have executed more than $80 million in total payment volume from stablecoins to fiat. We have done more payment volume in the last 2 months than we have done in the first 8 months. Today, we are processing about $1.5 million to $2 million every single day on the payment system. And we are able to do this across multiple currencies. We are able to do this across multiple blockchains, such as Ethereum, Polygon, Solana, Tron. We are able to do this across stablecoins, USDC and USDT, and across multiple use cases, whether it's first-party payments of on and off-ramp or third-party payments of bill payment, payroll, or supply chain payments. The challenging part is to do all of this reliably, multiple currencies, multiple blockchains, multiple use cases, and multiple stablecoins. That's the challenge, to make sure that we're able to do each of these currencies, each of these payment flows for each of these use cases accurately, reliably, and of course, when we scale it, we will have those challenges too.
You mentioned having to create a lot of liquidity in international markets. I'm curious, were you going to banks, FX brokers? Like, how did you find the partners that you needed to work with in order to be able to actually route transactions between different currencies?
Initially, when we started off, we were thinking that the large centralized exchanges would be the best option in order to convert stablecoins to fiat, and that was not accurate. The goal is to find local liquidity partners. There are players out there in the market who are experts in a few set of currencies, and the goal is to use them to convert the stablecoins into fiat. And these players, what we call liquidity partners, may not be the best in accessing local payment rails. Their expertise is simply to convert stablecoins to a small set of fiat currencies at scale, because they work with banks in the back end. And we use multiple liquidity providers across the globe. Then we take the fiat from the liquidity providers and use specialized disbursement providers who are either banks or fintechs connected to the local payment rails to send the funds to the final beneficiary's bank account. So we have multiple liquidity providers, multiple disbursement providers, and we orchestrate all of this on the Mesta Payments Network. The payments platform has the intelligence to decide which currency, which liquidity provider, which disbursement provider, and routes it to the final beneficiary's bank account within 30 minutes or less. And that was the challenging part. And the learning has been that it is not a single provider or 3 to 5 providers across the world that will help build this network. It's a basket of liquidity providers and many more disbursement providers, all connected seamlessly on the underlying Mesta payment network.
A lot of our listeners will know what I mean when I talk about a stablecoin sandwich. The idea is basically that you have an input payment method or currency, an output payment method or currency, and in the middle, the money is being moved through stablecoins. I'm curious, what do you think about the stablecoin sandwich as a payment method? Do you feel like it's the right strategy to onboard more merchants and people into the crypto ecosystem without them even needing to know that they're using crypto? Or do you see stablecoin native payments also taking off?
I think both. And let's talk about the sandwich, primarily because it's been spoken about a lot. Yes, the goal is to ultimately execute fiat to fiat payments. As we were speaking about it, fiat currencies are still deeply entrenched in local economies, and it's not the right strategy to disrupt them. So you still need to handle fiat to fiat payments. And in fact, the trillions of dollars that today move in the world is from fiat to fiat. So how do we make sure that fiat to fiat currencies are effective? While the stablecoin sandwich is spoken about, where you convert the fiat into stable and then the stablecoin back into fiat currencies, it's much more harder than that. The reason is, as I was mentioning, in each of these currencies, going and finding the right set of partners to convert and disperse And making sure that this happens for every single currency is not easy. So there are a lot of companies out there who say they accept stable coins and they give out fiat. But all they are doing is still using the archaic forms of payment methodologies that were there in the last 15 to 20 years, which is send a wire or have pre-funded liquidity pools of funds. And simply accepting stable coins on the top of outdated technology does not work. You still have the same inefficiencies of cost, whether it's a wire or maintaining capital intensive pools of liquidity funds. That's not going to solve the problem. So there are a lot of traditional payment companies now out there who have said, hey, we accept stable coins and we can deliver fiat, making sure that the stable coin sandwich is taken care of. But they will not be able to be this cost efficient and this fast because they are built on payment technologies that are outdated. So what Mesta has done with the stablecoin sandwich, and that's the goal, is to finally get to fiat, is to go currency after currency and rewire the payments, where in 30 minutes or less, we are able to take high transaction values. Imagine, let's say $200,000 being moved from stablecoins to euro. Mesta doesn't have 200,000 euros sitting in a bank account somewhere like traditional payment companies. And we don't use international Swift wire. We're able to take stablecoins worth 200,000 euro and in the next 30 minutes, convert it into euro and use local SEPA payment rails to send the funds to the final beneficiary at speeds that are unmatched because we use SEPA Instant and at cost that is unmatched because we don't have the need to use archaic payment methodologies. And that's why Mesta is cheaper and faster.
I'm curious to hear a little bit more about your anti-fraud and KYC measures. One of the common criticisms of crypto payments or payments that are made from a wallet is that wallet payments can be made anonymously, or you don't necessarily have visibility and insight into who's on both sides of the transaction. How do you think about scaling this payment system to more merchants while at the same time making sure that you're being compliant in different regions?
Yeah, absolutely. In fact, with the introduction of stablecoin payments on the blockchain, the fraud concerns have only gone up. The reason is that you have the world of fiat where there is potential for a lot of fraud. And that's why you have strong policies from regulators through AML policies, travel rule. Therefore, we need to do a KYC of the sender and OFAC sanction, PEP screening of the beneficiaries. All of these are industry standards in the world of fiat, which Mesta does. But now, as you said, we have a wallet on the blockchain to which anyone can send funds. How do we ensure that when we move money between the two worlds of fiat and stable coins, that there is no fraud that is seeping over or passing over? So what we have done is build robust policies even on the stablecoin acceptance space. So as soon as a stablecoin comes in to the Mesta ecosystem, the wallet from which the stablecoin comes is screened in real time. And within a few milliseconds, we will know if it comes from a suspicious wallet. And not just from a suspicious wallet. We go as many as 5 steps before when the wallet got funded. So we will have a history of transactions. And across all of these 5 or several hops, if any of the wallets has been suspicious, whether it's part of a dark web or it's part of a fraud ring, we will know that instantly and we reject the payment within few milliseconds. It's all completely automated because you can't do this manually and scale. So there is fraud prevention mechanisms specifically focused on the stablecoin infrastructure. There is fraud prevention mechanisms focused on the fiat world. And when money moves between these two worlds, Mesta has built an underlying internal risk transaction monitoring engine, which checks as money moves between these two worlds, if there's any suspicious transactions that we need to immediately stop proactively without even executing it. So it's more complex than the fiat world. And the key is to ensure that while each of these worlds have their own policies, when money moves between these two worlds, there is enough checks and balances so that there are no suspicious transactions passing through. And that's the challenge. And I think companies of the future that expect to win in this space would need to make sure that compliance is paramount, without which most of the companies that are trying to move fast without building compliance policies is going to be a short run for them.
Have you found any vendors or service providers particularly helpful in standing this up quickly? Unlike when you were starting off at Uber building their payment systems, today you have this huge constellation of infrastructure providers for fintech companies, payments companies, crypto companies. I'm curious, if we want to give a shout out, which systems have been the most helpful to let you scale?
Absolutely. One of the companies that we use in the world of fiat to do a KYC is a company called AI Price, AIPRISE. We found them fairly good. The reason why we chose AI Price is for their global nature. They also, just like Mesta, operate in multiple countries. And if a country is not present as we are scaling, they're also scaling. They were able to quickly build it for Mesta. So that's in the fiat world. In the world of blockchain, we use Merkle science, which is similar to chain analysis, and they have been working fairly well within a few milliseconds. We've had actually zero issues with them, and we have seen several potentially suspicious transactions being stopped in our systems where we were getting money from some suspicious wallet. So both these companies have worked exceedingly well. While these two companies are there, the goal is to tie them together on the underlying Mesta payment network, without which individually, if you work with these systems in silos, it's not going to be enough. The goal is as money moves between these two worlds, the checks and balances have to be still built by companies themselves.
Are there any unique vulnerabilities to hybrid payment systems using both blockchain and analog payments that you've had to think through correcting?
Hybrid payment systems, as we were discussing, has this challenge on it might be great in the fiat world, it might be individually great in the world of blockchain. But when you put both of them together, you would see a lot of situations where transaction can pass through without being detected as they pass between one world to another world. So I think that one of the key things is to ensure that there is more scrutiny when someone sends the stable coins. Today, some of our customers ask us, hey, why do we need, for example, to collect the business registration number, even for a beneficiary, or a tax ID for a company that's getting paid? We need to do that because the sender is sending stable coins and expecting fiat to be delivered. We have to have more checks in place in some cases. Our enhanced due diligence, or what we call EDD, is conservative. And some of our customers said, hey, can you relax these rules? We can do more transactions with you. And the answer is no, because the stablecoin world is still relatively new. By making sure we do more checks, by collecting more information than sometimes required, is necessary. So I think the one key learning for us is, especially when the source of funds is stablecoins, enhanced due diligence does kick in somewhat more frequently than in the world of fiat, and that's fine. That's okay till the industry settles down and these standards become more the norm.
So tell me what's next. I'm curious, what can we expect from Mesta in the future? New markets, new customer types, what are you focused on?
Yeah, I think some of the key features that we have launched this week actually is named USD, Euro, and GBP bank accounts, especially the named USD bank accounts. Today, Mesta has the ability to provide named USD bank accounts to individuals and businesses across the world so that they can send USD funds, or they can have their customers send USD funds to these bank accounts. From there, we can convert it into stable coins and deliver fiat or deliver stable coins as required. So that's an extremely powerful feature that we launched. We are continuing to launch many more currencies. Today, we have more than 40 currencies live on the Mesta payment network. We are continuing to launch more use cases. As I said, we do both first-party and third-party use cases. Today on the Mesta payments platform, you can on-ramp from USD, Euro, GBP, and we'll be adding more currency in the future. So that's sort of the set of currencies, set of capabilities that the Mesta payment network is launching and will continue to launch. The focus is to make sure that anywhere, anytime, the money is being delivered reliably every single time. And that's been the focus of Mesta. And before I get into the specifics of what's next for Mesta, I also want to talk about how I see, we've spoken about the medium-term future of the money being a combination of both fiat and stable coins. I also want to talk a little bit about how we see the future of financial services sort of being played out. From a medium to a long-term future, we truly see that real-world assets are being tokenized on the blockchain or digitized on the blockchain. Real-world assets such as real estate or financial instruments such as stocks or bonds are being digitized on the blockchain. So if you think about it, whenever money moves between one person and one entity to another entity, at the end of a transaction, so you sell a house and then you move money from one person to another person. You sell a stock, let's say you sell a share of Uber, and then money moves from the seller to the buyer, right? So how do we make sure that the entire chain of the transaction is as seamless as possible? So what we're currently doing is to make sure that the last leg of the transaction is as seamless as it can be through fiat and stable coins. So the last leg of the transaction is actual money movement. But if you take one step before that, we will soon see stocks, bonds, or real estate information being digitized on the blockchain. And the advantage of that is, imagine selling a house and after you find the buyer and the money is in your bank account in 30 minutes. Today, it takes several weeks. Imagine selling a stock of Uber. It still takes 2 to 3 days for you to get the money as the seller of the Uber stock. Imagine you're able to sell the stock and the ownership transfer happens within a few minutes and you're paid out in the next 30 minutes. That is the true power of the blockchain, where you have at the beginning of the transaction digitized the ownership, the actual transaction of the transfer of ownership, and finally the money movement. So when the future of financial services is when all these legs are being effectively digitized and put on the blockchain for efficient transfer of ownership and of course efficient transfer of money at the end of the transaction. That I see is the future of financial services, and Mesta will continue to be focused on the last leg, which is the actual money movement, where there's a lot more opportunity to make sure that at this point in time, we are building the capability to ensure that any business or any individual can transact using the Mesta payment network across currencies, across blockchains, across use cases. That's the capability that we have already built out. And then we continue to focus on reliability. How do we make sure that every single transaction happens exactly the same way, accurately for anyone across the world every single time? That's your second aspect of reliability. The third aspect is scalability. Today, Mesta Payment Network has the ability to execute hundreds of transactions per minute. But how do we make sure that it executes tens of thousands of transactions per minute? That's where the focus will be. And finally, the profitability of the transaction. While it is the last one, doesn't mean it is not important. Today, on the Mesta Payment Network, the transaction, every single transaction is gross transaction margin positive, but the goal is to continue to increase that. So what's next for Mesta is to continue to build the capabilities of moving money across the world for any currency, any use case, any blockchain, and any token, especially the stable coins. Then reliability, scalability, and finally profitability.
I'm glad that you brought up tokenized funds. It just seems like there's so many interesting avenues of experimentation happening in the US right now with digital currencies. In stablecoins, I think a lot of people see stablecoins and they say, so what? We're really recreating what kind of exists today in analog payment systems, and maybe it's faster or maybe it's cheaper, and that's good. But people are still saying, okay, well, we've already been improving, speed and cost in payment systems without stablecoins for a while. But things like tokenized assets, RWA funds, it actually shows that there's net new form factors that money can take using tokenization and using blockchain. I'm curious, if you're looking into the future, what functionality are you excited about that stablecoins enable that just wouldn't have been possible with conventional payment systems or analog payments?
Yeah, I think I still somewhat believe that we have not fully exploited the power of stablecoins in making sure that payments are as effective and efficient as possible. I think tokenized assets with real world assets will continue to make progress in the next 4 to 5 years. It's slightly a longer term game. But in the next 2 to 3 years, I think we are yet to see the full power of stablecoins. What I mean by that is this. Today, if you have, let's say, USD to Euro, USD is excellent for local commerce. Euro in Europe is excellent for local commerce. But it is still somewhat harder to move USD to Euro, where if you want it significantly faster, you do have to pay a high price. If you pay a low price, you have to wait for a longer period of time. It's hard to get both of them right and get it reliably every single time. Stablecoins fundamentally change that. While they keep local currencies in local economies excellent, when you make the international leap, the ability to make sure that a form of USD, which is USDC or USDT, is instantly being transferred across the world is actually extremely powerful. And we have only scratched the surface from an adoption perspective. Businesses tend to adopt this first, and we have seen a lot of business adoption on the Mesta payment network, but we're still talking of tens of billions of dollars. There's trillions of dollars that are moved every single year across the world in B2B payments. And we have not scratched the surface of it yet. We have not even reached, I think, even $500 billion of total money moved efficiently on the stablecoin payment rails when the use case is money movement between fiat to fiat. So there is a long way to go. So I actually do not completely subscribe to the idea that, hey, without stablecoins, things have been perfectly fine. They have been okay, but stablecoins makes that giant leap in both speed and cost and reliability, and you don't have to choose between one or two of these three. You can get all of them effectively across multiple currencies.
I'm curious to hear about who this has been resonating with. Which merchant types or businesses account for your early growth and said immediately, okay, this makes sense. This solves my problem. And have you seen the types of customers that Mesta onboards starting to diversify over time, or new merchant or customer types coming on board?
So I think the early customer base that even continues today is what we call fintech platforms. An example of a successful fintech platform in the world of fiat is, let's say, Bill or Brex or Ramp. They have businesses underneath these platforms that primarily deal in fiat. But now we have a set of new age fintechs who all want to be the next generation Bill or the next generation Brex, who have businesses underneath their platform that deal in both fiat and stablecoins. So these fintech platforms, or what we call Web3 fintech platforms, have businesses that deal actively in stablecoins as a source of money or source of funds. These businesses want to make bill payments, want to make payroll payments, want to simply convert the stablecoins into fiat so that they can use the fiat for local operations and local commerce. And these are the customers that are coming to Mesta. These fintech platforms are direct customers of Mesta, where the businesses underneath the fintech platform sends the stable coins to Mesta through the fintech platform and instruct Mesta to make payments across the world. So there is a new trend out there that is rapidly growing, where fintech platforms and businesses in the future will deal in both kinds of money, both fiat and stable coins. For certain use cases, they will use fiat, such as local commerce. And for certain use cases like cross-border payments, they will use stable coins. And that's the trend we are increasingly seeing. The use cases are also multiplying, meaning initially we saw a lot of on-ramp and off-ramp, which is first-party use cases, which is great. But now we actually see payroll payments being done from, let's say, stable coins to Indian National Rupee, or bill payments being done from stable coins to Euro, GBP, and Singapore dollar. So all the fiat-related use cases which dominate in the fiat world are being adopted by the Web3 fintechs, with the source of funds being stable coins. And I believe in the near future, the world of Web3 and Web2 will converge. There will be fintech merchants or platforms who have businesses that deal in both fiat and stable coins. Would you call them a Web3 merchant or a Web2 merchant? It doesn't matter. They're just two different forms of money. And that's the future that we are going towards, where fintech platforms and businesses deal in both kinds of money. And if that's the future we're going towards, the future of payment networks is a network that moves both fiat and stablecoins efficiently, faster, cheaper, and reliably. And that's exactly what Mesta is building, a payment network that moves both fiat and stablecoins efficiently and does not differentiate. So that's the trends we are seeing, where both the forms of money will be used and businesses will use them for different needs and different purposes. And the coexistence is what will work.
What do you think about the Genius Act? As you mentioned, it passed a few weeks before, and it really seems to have opened up the road for innovation in the US and payment systems. I'm sure you have a lot of thoughts.
We have been waiting for this for a very long time now, and thankfully it's finally being passed. I remember raising Mesta's seed round of funding in 2023, and I was literally banging the table and telling investors, this is coming. And while everyone, including me and the investors, were slightly skeptical, I at least strongly believed that it was just a matter of time. And finally, it has happened. So there are two impacts to the Genius Act that has passed. Number one, a lot more banks we will see in the next 6 to 12 months being open to serve fintechs such as Mesta. Today, Mesta works with a small set of banks who are considered crypto-friendly. And this terminology will no longer be true in the next 6 to 12 months because most banks are expected to be crypto-friendly. There won't be this small coterie of banks which will say, hey, we serve this sector. So that's the first thing, and that's excellent for the industry. So because Mesta will have multiple choices, which will increase reliability and redundancy for fintechs such as Mesta. And that is expected to happen. It will take a little bit of time because when regulations come in, banks have to study the regulations, implement standards and technology systems within the banks to serve the new regulation and fintechs like Mesta. So that's the first thing, and that's what we are waiting for at this point in time. Secondly, we will see a lot of banks and more non-banking financial institutions work with stablecoins. And what does it mean? Number one, we've already seen JP Morgan that launched it a year ago, an internal stablecoin to move treasury management funds. A lot more banks will do this. We should see a lot more banks and NBFIs introduce stablecoins, new stablecoins. Might be a little bit of challenge to get the liquidity of the top two stablecoins, but we will see that. That's the second thing that is going to happen, where more private and public companies are expected to introduce new stablecoins in the market. And what I'm most excited about is non-USD backed stablecoins. Well, you have USDC and USDT, but both are pegged to the US dollar, which is great. You do have Euro C, but the liquidity is not very high at this point in time. With the Genius Act and regulation around the world increasing and being more standardized, I expect to see a lot more stable coins in other currencies, such as Singapore dollar, Hong Kong dollar, Euro, more stable coins backed with Euro. And when that happens, that's when we truly get into the world of what is called on-chain Forex, where you have stable coins on both sides of the equation. Today, when people talk of on-chain Forex, it's incomplete because more than 95% of the time, you only have a stable coin that's backed with USD on one side. So it's USDC or USDT being converted into another fiat. The fiat is not on-chain. Only one side of the equation is on-chain. So imagine we have USDC or USDT and an equally powerful and liquid non-USD based stablecoin on the other side. That's when on-chain Forex will be significantly efficient, where within seconds, we'll be able to convert one stablecoin to another non-USD backed stablecoin at speeds, cost, and reliability that will be unmatched as compared to the current world of Forex.
Well, I appreciate the time that you've stopped here to speak with us today about the future for tokenized assets and payments in the US, the impact of stablecoins on how merchants move money, and what Mesta's been doing and how you've dealt with scaling. I'm curious if we could end on a future-looking note, and to the extent that you could share, what's coming out from Mesta and what are you most excited about in the next year?
Absolutely. So Mesta can be described in 5 words. It's a global fiat plus stablecoin payment network, which means we are here to disrupt the world of ultimately fiat-to-fiat payments. That's the holy grail. Today, the Mesta payment network can convert stablecoins to 40 plus currencies at unmatched pricing and cost and speed. We are also able to convert a number of fiat currencies to stablecoin. But what we are focused on achieving is to make sure that pick any fiat currency in the world, convert it to any other fiat currency in the world. If we are able to do this at unmatched speed and unmatched cost and high levels of reliability and scalability, that is the holy grail of disrupting trillions of dollars in payments that happen in fiat to fiat, while stablecoins continue to be as a back-end medium and as an underlying technology to fundamentally change fiat to fiat payments. And for this goal, Mesta is continuing to introduce more currencies, continuing to optimize every single payment rail across the world, because I expect in the next 3 to 5 years, when one fiat is converted to another fiat, stablecoins will become the de facto standard as to how this conversion happens. And Mesta is in the forefront of ushering this change to ensure that any fiat currency to any other fiat currency in the world can be executed seamlessly every single time.
Well, I'm excited to follow along as you build towards that vision. I'm sure that we'll be having this conversation again next year when stablecoins continue to take over. And we'll be talking not just about 12 million, but hopefully 120 million or $1.2 billion in volume on Mesta. Sandeep, thanks so much for stopping by. I hope I get a chance to see you again before next year's StableCon.
Thank you, Nick, for having me. It was great to have this conversation with you, and we touched upon a range of topics. I'm glad that both of us found the time to do this. Thank you for having me again.
Same here. We'll talk soon.